I've been teaching over a decade, and I always see that people focus on debits and credits and just glance at definitions. But here is a problem. IAS 32 financial instruments presentation is tested very often, especially in question 2 about ethics, and this means that you actually have to know how to apply definition. And 80% chance that you are going to be asked about the difference between liability and equity. So you need to know how to challenge this scenario. And this means that if the question is about equity versus liability, you need to pay attention to what is the focus. And when we look at the definition of financial liability, we will see that there are two parts of it that are the most important, which is the obligation to deliver cash or another financial instrument. And the second one is the obligation to deliver variable number of entities' own equity instruments. So this is something like shares worth $1 million rather than 1 million shares. And this means that you will be required to challenge the scenario. And please don't answer the question, attempt the question. Meaning that if the question involves cash, or the absence of cash, you are going to look at the two parts of cash flows or the absence of cash flows, dividend or interest payment, and then you are going to look at the redemption. So your answer is going to be, let's say, the dividend is going to be paid only when the dividend is paid to the ordinary shareholders. So the company does not have an unavoidable obligation to deliver cash, so it doesn't look like a financial liability. And then you are going to do the same trick for the redemption. So, for example, the redemption is going to happen in 3 years at investor's request. So there is unavoidable obligation to deliver cash, and as such, it's a financial liability. So once again, go back to the definition, read the part about the cash, read the part about the variable number of equity instruments, and make sure that you take all parts of the instruments that you are challenging, so either interest, dividend, or redemption, and apply it to those. And that is how IAS 32 is tested the most often. And I will see you next in my SBR Made Easy podcast.